Hello, everyone. Welcome to our live stream. It is the Prospero.Ai Stock Market Live. We are at a weird time this week, Thursday at 1 p.m. right now. Usually, this stream is our Wednesday 3 p.m. closing bell streams, but the Labor Day holiday has us pushed back one day. So, welcome to the stream. I see people already rolling in. Be sure to like it on YouTube and Twitter. It's good for the algorithm. We are fastly approaching 2,000 subscribers on YouTube. So if you haven't done so yet, hit that subscribe button. I'm going to take you guys through some of the topics that we're going to be discussing today. We're seeing some more weakness in the market, which are net option sentiment in Prospero has sniffed out recently. I'll give you guys, before I get into the topics, a quick update on the QQQ and the SPY net option sentiment. So the QQQ right now is at 22, which is a pretty low level, but at least it's not at 0, right? Because that's where it was hitting yesterday. So maybe we're catching some footing. But the SPY net option sentiment is at 9. So both the SPY and the QQQ at bearish levels. We've covered the September weakness and seasonal period of the stock market on the stream. So hopefully that helped out some people with their investing and trading in the current market environment. And obviously the ongoing concerns of the election and how that's weighing on the market as well. But today we're going to discuss first the ADP private payroll numbers, which were released this morning, possibly showing some more weakness in the markets, furthering the Fed's rate path of cutting rates. So we'll talk about that. And then we have NVIDIA, which has just been whipsawed the last couple of days. A story came out that they were getting an antitrust investigation against them, but then within 24 hours, it was already rebuked. So what is the truth? Will they get an antitrust subpoena? Who knows? But as of right now, it looks like that story and that headline was fake. But I'm sure there's more to break and be covered on that end. And then we have a stock that we haven't touched on much on these streams. Topgolf Callaway has been a underperforming stock for years now. The company is going to look to change their path, change their course by splitting up the Topgolf and the Callaway portions of their business. I think I've heard before, and I'll ask George this when he enters the stream. People talk about how sometimes the sum of the parts can be more than the value of it collectively together. And I think a lot of people have mentioned that when they want big tech to be broken up, like Google, Amazon, Apple, all of those companies. So we'll talk about that. And then a favorite stock on this stream, Tesla, had some news. The stock was up this morning after on Twitter, it looked like it was confirmed that full self-driving will be available in Europe and China in Q1 of 2025. We covered, originally the Tesla event for full self-driving was probably supposed to be around this date. I think it was in the first or second week of September, which got pushed back to October 11th, I believe now. But that event is coming up, and now this story about full self-driving and Tesla stock is breaking out. I'm curious now. I haven't looked at it in a while, as the market has kind of been underperforming throughout the day. Has Tesla been able to hold its gains? Let's check. Yeah, it's still up 4.5%. So looks like a good news story for Tesla. And then if you're a usual viewer of the stream, you probably saw us cover this story at the end of last year where U.S. Steel was being bought by a Japanese company, Nippon Steel, causing U.S. Steel stock to rise. But it looks like that deal is getting a roadblock from the Biden administration. They want to keep the something that important to U.S. infrastructure inside of the U.S. It looks like it might get blocked, and U.S. Steel stock is dropping off of that news. So we'll discuss that. And then we have two stories to wrap up the stream today. It's going to be a quicker stream. I believe we're at 1:30, going to switch it over to the model portfolio update, which if you are new to the stream, it's when we make live changes to our model portfolio that you get to watch, which is usually paid for, but it's free on the stream. So there's a plus. That's the reason to stick around. And let's see, any NFL fans in the chat? comment what your favorite NFL team is if you're a football fan. Today is opening day. The Chiefs and Ravens will be playing tonight, so we had to have a story around the NFL. And this one is about the valuations of the league and how they've just continued to climb. And some of the teams that have recently sold, I believe the Denver Broncos, the Washington Commanders, one other team, Miami Dolphins maybe, they've all outperformed the performance of the S&P 500 over the time period from when they were bought and sold, which is kind of crazy. And I'll share with you. Hello, George. Welcome to the stream.
Hello.
I'll share with you guys.
Day, not my normal time. Sorry, everyone.
Yeah, we're all off this week. We got kicked back a day because of Labor Day, but we're gonna get this stream in, and we got some fun topics to talk about. And just let me close off this NFL topic for you guys. I'll share with you, the highest value team in the NFL, the lowest value team, the average of all the teams, and also the NFL's revenue. So we'll be looking at the NFL's business today in honor of opening day. But George, I want to start off a little bit more macro. We got the ADP private payrolls today, which grew by 99,000, but it was the smallest monthly gain since January of 2021. So going back, over 3 years with that type of weakness, seems like the economy is really starting to signal that, I guess, the high interest rates have had their effect, and it's starting to slow down and weaken. So a report like this, I'm sure, just ensures Jerome Powell's move this meeting if it wasn't already. But is there anything more, or is there anything new we learned from this number today, or is it all kind of just building up on the same story that we've had?
Yeah, I mean, I'd be interested to check the probabilities of the rate increase. I think that's the only thing that we could say, like, whether we've learned something new or not. And my guess, yeah, I mean, it's a little like when we looked a few days ago, it was a 31% chance of basically a 0.5% cut, and it was like 31 earlier in the week. So, that sounds about right in terms of what how the market's reacting today. We're seeing a bit of a rebound in QQQ and SPY net option sentiment, not tons. So yeah, I mean, I think that kind of says everything right there. We're seeing a bit like some consumer cyclicals doing. I mean, especially, a story later on Tesla is doing well today. We're seeing some tech rebounds. We're seeing small caps do a little better, but that's just it. It's a little better. It's not just like this hasn't made a big impact, much like we're seeing, with that probability change. So yeah, marginally, I think tomorrow is going to be the much more important, jobs report. But even then, I think all we're looking at is degrees of, are we going to get a 0.25 or a 0.5? And if it starts tipping the balance to like the 0.5 being more likely, I think that'll help the market. But we're seeing we've seen this ongoing volatility, and I'm happy that we've been cautious and we've been warning about it. We've seen, like, especially QQQ net option sentiment go from 0 to 60 back to 0, faster than I've ever seen it. And like, there hasn't been, real stops at, the 20s or 30s in between those things. It's just kind of been, up, down, so yeah, people are pretty, I think the way this market looks is like people are going to take their tech gains when the momentum is there, but when the momentum leaves, it seems to be leaving pretty fast, and there seems to be more and more things that are, scaring people.
And speaking of scaring people, there was a really scary headline for a very important stock for the market, NVIDIA. I think on Tuesday it broke that they were being subpoenaed with an antitrust investigation, which impacted the stock negatively. But then within 24 hours, the company came out and said that they hadn't gotten subpoenaed and they were under no antitrust investigation, which is just, it's crazy to me to see a story of that importance hit the news cycle when there's no real meat to it. But what do you make of that?
I mean, depending on how tinfoil hat you want to go, right? There's like the level 1 tinfoil hat that, you know, essentially there was a misunderstanding, right? Someone got a report, they heard someone say something, maybe someone was considering it, who knows, you know. And by the way, like I always play the game, and I encourage retail investors to play this game too. It's like, is it a mistake or is it malfeasance? And anyone that knows they're sure about these things probably actually is too sure. Like, when we say these kind of things, because we very rarely have enough information to know that. But like when I've been in a position to have the information to know that, I found it probably being just an error more frequently than the malfeasance, which I'm not trying to downplay that malfeasance exists. It does, right? But don't ever underestimate the possibility that's an error. That's why we're tinfoil hat level 1. Tinfoil hat level 2 is, some NVIDIA shorters, leaked the information, pretended that they had reliable information to a paper, or like, the level 2.5 tinfoil hat is like, the people that own whatever, outlet, media, whatever, they had some kind of skin in the game on the short or the position or where their money's parked. That's level 2.5. Level 3 tinfoil hat, and I promise this is the last one. We're not going any deeper than this. We're not going to, pedophiles and pizza joints. That can stay on Reddit and off this live stream for now, until there's better evidence. Anyway, level 3 is there was going to be something that was going out of those offices, and perhaps someone was about to send that notice, and someone higher up killed it. So that person who's reporting it to the media, maybe working on it, they think it's a sure thing. But when that thing got run up the chain, it died. Which is like, as much as we're just like mistake, like you haven't been paying attention in this country if you don't think things that were going to be brought to court get shut down because someone higher up the food chain doesn't like it. Now, nobody's accusing anyone of anything. I did call that the level 3 tinfoil hat. Put on whichever one you'd like. But I'll also close with saying, like, I'd bet on the mistake first, almost always, when there's a lack of other evidence. And I don't see any other evidence to like really go with one of those theories more than the mistake. But if anyone in the audience knows anything, I haven't really done a deep dive on it myself other than reading the story.
And just before we move on from the semis for the day, any update to your Broadcom thesis or position? They had the earnings after the market today. Do you still feel pretty good about it heading into it, or no?
I still feel like, I think pretty good is the operative word. Probably not good enough to play earnings. Like it's just one of those things that the market is just like so tentative, and like even this week, right? Was there really an event that turned everything so bearish? I can't really identify it, right? We had some good news today for people that want cuts, but like, bad news, good news, it's getting jumbled up a little bit. So the market is generally, people have watched me, I don't love to play earnings. It's just too much of a binary event. But when I do play it, it's kind of the opposite of this, right? I'll say like, hey, Broadcom, I'm pretty sure is going to have good earnings, and I'm pretty sure they're going to have good earnings. But look at NVIDIA. NVIDIA had what I would call like amazing earnings for any other company, but not amazing for them. And the market didn't react well to that. So could be a similar situation with Broadcom. And basically what I'm saying here is, if I was more comfortable that we were in a bull market, we had kind of seen a much more solid and consistent, where I thought we were building to on the QQQ net option sentiment, but that disappeared pretty fast. And I'm glad I was prepared for that. I didn't get too comfortable. But yeah, I mean, if you look at our portfolio specifically, I think we probably hedged a little too much last week. But this week, and what's been a tough week for a lot of people, we're pretty close to even. I think we'll go up by the end of the day. So yes, we're being cautious. The macro momentum of the market is not in a place where I don't own any chips long. I don't own any large cap tech long, and I can't remember. I mean, we're going last year. I can't remember the last time that was true. It's been a long time since I did that, and that's just purely volatility. And hey, when you see things like the NVIDIA story, no matter what tinfoil hat level you're putting on, that's the kind of thing that lets me know that maybe it is too risky of a market, because mistakes like this might keep happening.
And I see a comment that just came through from Rock and Roll. Good to see you back. I think you were here on the Tuesday stream. Hey, George, trading letter subscriber here. Just looking to long portfolio and some big losses in stocks like UPST, NVCR, and ENPH, and a bunch of others. Momentum score longs have run into trouble.
Yeah, I mean, I think we're refining our process on that. I mean, I wouldn't necessarily think that overall there's any issue with that. I think if anything, I need to be quicker with the exits. That's what I'm thinking about, because yeah, I mean, what I'll do today is I'll get an updated momentum score, and that's what I really should be doing more often. So I appreciate it. I'm adding the momentum score and then cutting based on traditional means. But what I really should be doing, and I think this is a good, to track the momentum when we go in. I might think about putting that together, tracking the sheets, putting together a history. I appreciate. Yeah, we're always happy to look at things head on. The trading letter, for those that aren't, we're very open about the fact that it's a huge portfolio. We're throwing signals, and we're trying to improve overall for a portfolio of over 2,000 investments in a year. I mean, it has amazing results. We're talking about much bigger than the S&P 500 in terms of the number of investments, yet it's beating it by, almost 30%. So, oh no. Do we have the lag?
Not for me. I see you and hear you loud and clear.
Okay, great.
I see a comment from Chris. With market volatility.
Well, I want to finish that question. Anyway.
Oh, sorry.
Anyway, yes. I will today take a look at the updated momentum scores, and I'll make sure that we're dropping anything, because generally what we're looking at are momentum scores in the 70s. So I'll take a look and hack away at the momentum scores that have gone down to the 50s, 40s, that kind of thing. I typically have seen perfectly good longs in the 60s, but I think you raise a good point. I don't think we're doing enough to monitor the momentum score on an ongoing basis.
And so from Chris, so thank you for your question, Rock and Roll. From Chris, we have, with market volatility predicted until the election, would covered calls ETFs like QYLD and QDTE be a good play?
I mean, again, my options disclaimer, only do it if you're an expert or a professional, or you've had good success long short for a bit. I don't love covered calls. I just think the market generally goes up. You're just taking away your upside while you only limit your downside on a marginal. But if premiums are amazing, maybe, but my preferred strategy, actually, and it clears up capital, especially in a market like this. What I like to do is sell puts And like, so I kind of did this yesterday a little bit or to start the week. So like, for an example, like I might sell puts on Broadcom and then short ON, like that's a semiconductor stock, right? So I'm taking a winner I like and then shorting a loser. And actually, both of those are putting capital in my pocket, right? Because a short is a loan, and then selling puts, you're getting the premiums, right? And I sell puts short term, right? And then with that capital, you can either, buy puts on other things, but that's a little too much leverage. Like, or with that capital, you can just put it in something very safe, right? You could put it in a dividend ETF, you could put it in gold, you could put it in different things. Like, that's my favorite trade if I'm going to be selling something, and just to be very specific and to summarize, it and say only if this is in your comfort zone. Like, sell puts on a stock you don't like that you're bullish on, then short a stock that's similar that you like less than it. And I would watch cap in these. I suggest ON Semiconductor because it's a larger semiconductor company in cap, even though there's some that look a little worse in the signals, right? And then with that cash that you get, buy, a safe asset. And it depends on, like, I'm being vague. You have to run the numbers yourself, and hopefully you're capable of doing this. Look at your exposure, especially on the 1 week, right? Because I always advocate selling short expiration puts. I just think it's way better. You're getting paid the most for theta decay. And then, look at your exposure. And then, for that, you could also buy some puts on QQQ just to give yourself extra insurance on the puts that you sold on Broadcom. And like, that's what I always encourage people to do, where you're setting yourself up for more success, a relative value play, right? Because in this scenario that we're setting up, right, you have a safe asset that you're getting, cash to put in, right? Then you're also, all you have to do on the base trade is just be right that Broadcom's going to do better than ON, with a little hedge that it also just has to beat the QQQ. I wouldn't do that today on Broadcom, by the way, going into earnings. That's just like generally the safest thing. You might want to pick something like Microsoft. Like that's even safer, but then you'd have to find kind of like an equivalent, which is also tough. But anyway, that's what for the people that's in the wheelhouse. I don't really like covered. I don't really like covered calls. It's one of my least favorite things.
Thank you for the question, though, Chris. I think that brought up a great talking point. One story that we have to get to today is this Tesla announcement.
Oh, they said covered called ETFs. Oh, oops. Sorry,
yeah, but
I just rambled about a whole different. Actually, like on a much shorter answer, a covered call ETF is an interesting way to handle this. I mean, I still prefer the way I suggested, but it is more hands-on. And you're right, like without having to worry to manage the risk and the premiums and the things like that yourself, that's not a bad solution. But again, it kind of reverts to the same answer. Like, we're just covered call strategies in general, you're limiting your upside. And in this volatile market, you could really regret any upside limiting trades just as much as you'd regret not limiting your downside. You've got to be prepared to do both in this market through the election.
Well, here's a stock you didn't want to limit your upside on, especially today, is Tesla. There was an announcement over Twitter about how full self-driving will be available in Europe and China in Q1 2025. So it's looking like it's aligning, like it's going to be a perfect storm maybe for Tesla stock, especially like we've said, if Trump gets in office with how they've aligned themselves. It looks like US, China, and Europe could all happen at the same time possibly. Is Tesla maybe quietly regaining being the largest tech stock, like in the number one position?
I mean, it's rounding out like all of this FSD in other countries is really rounding out our prediction that a Trump presidency could mean a pretty aggressive rollout in the US. I mean, it's all really set up to do that. And the US is the market that Elon really wants. So I wouldn't be surprised if like a lot of this stuff, pushing it in other countries, was knowing that he couldn't really push it here with this administration and just making it as hard as possible, regardless of who takes office. I mean, I think there's some hedging here that even if the Democrats win, there's a case to be made on that. But yeah, I think, I doubled up on Tesla for I think it's 2 of my 5 longs right now, or maybe even, 2 of my 5 longs. It's like a throwback to 2023 when Tesla was our big stock. But yeah, this is the upside. They went hard at AI, with they had a great robotics announcement yesterday. They, have all of this full self-driving energy there. And I mean, that is just a huge moneymaker if it works. Not only for the cars that are already sold that are going to be outfitted with that, but if you have a viable, beatable, full self-driving solution, just a better than market, that is a reason to buy Teslas, no matter what your political affiliations are. I know there's some people that are going to probably be never Tesla people, but there's probably a lot of people that might be like, Elon Musk's kind of a pain in the ass. I'm not going to buy a Tesla. Seeing everybody zip around in self-driving cars, and all of a sudden their hatred of him is going to subside enough that they want one for themselves. I mean, I'm probably in that category where it's just I think he's being a bit of a weirdo and a jerk. I know we've mentioned this, but I still can't really wrap my head around someone who's we need to save the planet. I'm going to go to Mars because we're killing the planet, to just be oh, but we might need to burn fossil fuels to protect industry. That I just cannot wrap my head around. But at the same time, if this car is offering me the best way to, drive without driving, or even just getting a taxi where I don't have to deal with a person. I mean, dealing with people isn't the worst. Sometimes you can have an interesting conversation, but I'd rather not deal with people. And one of the reasons I'd rather not deal with people is, I believe the accident frequency of people is going to be higher than a self-driving car. When that is, I don't know. And I probably won't. I'll probably want to monitor the situation for a bit before I jump in on that one. But there's no question. Just to be specific about, I think one of the upsides that could happen in a Trump presidency and full self-driving, I could easily see taxi cab fleets being, because a lot of those taxi cabs are oh, you have to deal with the local governments. Trump's the kind of guy that could just be oh, I'm giving Tesla a license to operate cabs in every city, right?
Yeah, for sure.
And that might just happen very quickly.
So I know we want to do our switch over at the 30-minute mark. So let's get to these 2 topics and quickly get through them. So Topgolf Callaway stock has been one of the worst performing stocks for a long time now, going back years. They're announcing a change where they're going to split up the Topgolf and the Callaway portions of their big business. Callaway acquired Topgolf in 2021. I've heard before that, sometimes the sum of the parts is more valuable than the collective value when people are talking about big tech companies and trying to split them up. So do you think this is a good move by Topgolf Callaway?
Sometimes people just do this stuff change for the sake of change. They're just hey, things are going really bad. I think the market might react if we just change something up. And it could. And sometimes the perception is that, part of it is that if you have specialized management teams to the different businesses, and they are different businesses, that they can do a better job addressing the specific needs of the businesses. But yeah, we got saved on non-option sentiment on that one. We were riding it down a little bit and net option sentiment went up and we got out.
That's the beauty of our signals. And then this one we just had to get to today because, us two sports fans, today is the opening day of the NFL. Ravens Chiefs tonight. Our Giants play on Sunday. I'll be in attendance. Thank you to my uncle. But so the CNBC did a huge breakdown of like all of the values and the whole business of the NFL. Most valuable team was the Dallas Cowboys at 11 billion. Our Giants were 7.85 billion, and the cheapest team was the Bengals at 5.25 billion. Now the NFL did 20.5 billion in revenue in 2023, which we both were a little surprised at how low that number was. I think a fun thought experiment would be like, if the NFL was a public company, what would its market cap be?
I actually think the much more interesting question is not just the NFL, but what would like the market cap of the NFL and the teams be? You could just control the whole thing. And I think if it was like the NFL and all the teams, you might see it. I mean, I think it's without a doubt in the top 100 companies, like how far that goes. But the NFL, the issue with it, I think, is that, I mean, you have to plan on it going up and up in value, but there are some kind of headwinds for it, like the injuries. Like I love to learn about like NFL, like behind the scenes a lot. There's like, I've heard there's a lot of people getting paid like by the league for their injuries, like because they don't want to give insurance, and all these people are just in like bad situations. And I think the story's turning on it. So it's like one of those things, you look at it as a company, right? And you see revenues going up, and you want to say like, okay, like, and they do that consistently. And like these teams just keep going up in value, like, I'd say better than any league. But then there's the other side that you want to like, I think there are legitimate tailwinds or headwinds. And like the story, I feel like in the NFL for a long time was like, yeah, it's a tough game, but like they're paid a lot and it's tough. I think I've seen it start to turn a little more where people are like, it's harder to look away from like the long-term brain damage, the CTE, and like, you can do everything you want around that. And who knows, eventually it could catch up with them. It couldn't. I honestly think the bigger problem for the NFL is not enough people turning on it. Like people still go, I mean, these businesses are booming. I actually think the bigger potential problem is if parents start putting their kids in other sports and the talent level drops. Now, you could argue that's not really happening. The athletes we're seeing going into the NFL are still incredible. But, I'd say parents are becoming more and more conscientious, protective of their kids. I think that's a trend. So, we might not yet have seen that, because like right now we're seeing the people in the NFL with parents 20 years ago. And if you think about like how much parents have changed in the last 20 years, like, yeah, we could start seeing that talent pool change. And, maybe something like US soccer getting better. Like, I think like that's something that we could see if we see this trend change. Soccer is becoming more popular, and, football, kind of has some issues. Who knows? It would be very interesting to see, less talent going into the NFL and the US actually having like a legitimate soccer team at some point in our life. Because Lord knows, like we have the athletes to do it. Soccer is just not liked enough. I don't think anyone would question whether America has, the top athletes in the world. It's just like they're not being funneled into that. So it might be, maybe.
Well, pulling on that thread, maybe that's why pickleball is the fastest growing sport in America nowadays. People are choosing pickleball over football. Who knows?
I just remember like, and I think this was a big thing with like John Daly and golf, but I do think it's like, I'll admit that I watched some really trashy TV here. On Vanderpump Rules, you saw this like one character that was playing pickleball that was kind of like this, fat, unathletic. And, normally I don't want to criticize people for that, but he turned out to be a pretty garbage human. So I don't really mind calling him out for his, lack of athleticism. And also, like, sometimes just wear, like, he was always wearing like tight shirts that really like showed why people do that. I don't really know, but he was very good at pickleball. And I feel like any sport where you can be out of shape, I don't begrudge you that, but I don't really like, we're talking about like different like kind of athletes. I don't really think any sport where you can be like kind of not in shape is something that I view as like a sport where you have to be in like, peak physical condition. And I'm not just trying to say like the major things. Like you don't really see like a lot of like out of shape, like javelin throwers even. And I'm just guessing. I haven't watched tons of the javelin, right? But there's certain sports where you just like, you're not going to compete unless you're in peak physical condition. And maybe I need to watch the Olympic pickleballers. But you did like, I do think there should be some correlation between like the athletic ability of someone and their ability to win. Like as you get into like professional Olympic sports or whatever, like God bless anyone that can overachieve and beat up on their friends if they're in better shape than them. But I think by the time you're talking about like, okay, like how legitimate is this sport? And baseball has it too. Baseball always had some relief pitchers that weren't in the best shape. And I was always just like, I don't necessarily look at it in the same fashion. But yeah, I need to stop with this topic. I'm rambling and possibly being offensive, and I don't mean to be. It's probably like I probably feel like a bit of an old person here, and like not progressive enough in terms of like I don't really want to be insulting anyone for their body type or anything like that. I think it's just like the idols that I grew up like with in professional sports were like specimens of athleticism as well as like leadership and drive. And I can be a little narrow-minded, I think, and on that. I'll end that ramble that way.
Sure, and I just say I totally agree with you. So we're on the same page there. If people want to play a racket sport, choose tennis over pickleball. But we'll see you on the other side, George, in the Prospero.Ai laboratory, and we'll get to the model portfolio update. Let's take a live look at the markets. Hopefully, everybody has liked the stream so far. We've had close to 1,000 people join the stream between Twitter and YouTube. So love to see you guys in here. Thank you so much for tuning in. Let's get an update on the SPY and the QQQ net option sentiment. It doesn't look like there's been a lot of overall movement in the markets since we started the stream. Maybe a little bit. Oh, yeah. Okay. So a little bit of an upward move in the SPY and the QQQ just starting. So maybe we'll end the day green. Who knows? But let's take a look at the net options. We'll start with the QQQ. And we are at, down to 3 for this QQQ net option sentiment. That's not very bullish. I think when we started the stream, it was in the 20s, right? So even though the market's going up, maybe the underlying surface signals we're seeing are not really going up with it. And the SPY is at 8. So both the SPY and the QQQ net option sentiments in single digits, not great to the bulls out there. I guess, if you're a bear, you're probably pumping your fist. You're happy about that. But looks like our signals are reading that the markets will head lower, at least in the very near future. I hope we had some sports fans enjoy our topic to end the topics part of our stream today. If you're a hardcore investor and just coming for that, you may not have liked the last 7 to 8 minutes of the stream, but I had to work it in with the NFL starting today. We didn't get to 2 stories I was going to bring up. Maybe if you guys want to hear these stories, we'll bring them up on Monday's stream. But
okay, here we go.
We always manage to go over somehow, George.
No, I
our time limits.
I'm to blame for that, but I'm excited about this.
I think we built in a buffer today, though, so we should be okay.
Yeah, we're gonna do a very interesting letter on the cuts. Hold on while I get everything set up here.
So when you were doing the switchover, we just took a live look at the SPY and the QQQ net options, and they were both single digits.
Damn. All right. After recovering. But I mean, I've been ready for this.
You're ready for everything. Anything
right.
the market can throw at us.
Not always, but a lot of the time. Okay. Here we go. Okay. QQQ. And FPI.
The QQ and SPY net option sentiments are both in single digits. We will look to cut again and add some shorts as a result. It is only fitting. Payrolls came in today light, and while this is good news for rate cuts, increasing the probability of 0.5% in the next meeting, the market doesn't seem too pleased. So it might be more bad news is bad news heading into some important job numbers tomorrow.
Why don't they do the job numbers on Friday? I feel like that's like one of the situations where they like fire people on Fridays. All right. Okay. Oh, I forgot. There's an extra step today. Oh, oops. Damn it. Stop sharing. I got too many tabs, too many things going on. I wish it would let you like move the share off the screen. Okay. What we need here is the model portfolio. Okay. Let's take a look. See if we can locate any of these troublesome move scores. See, I think if you're still here, rock and roll. Like, I think the issue is, I think a lot of these move scores look good day one, and it's just a question of, you know, figuring out the right cadence to get out of that. And we will look at that right now. All right, so we're going to do that. Tesla doesn't have a move score. Oh, wait, what's going on here? 1907. What? It does have a move score. What's your problem? Oh, I see. I see. It's my problem. Classic Excel error. Oh, those should not have moved. Okay. Let's do smallest to largest. Okay, yeah, we should. The issue is. Okay, I think we're just going to. Can you tell me CEG net option sentiment trend?
CEG is currently downtrending. It's at 70. Lower highs, lower lows.
How about MCO?
MCO, much more neutral trend, currently at 30. It's pretty volatile though, going like up and down between the 80 and 30s throughout it.
Actually, I don't want to do this yet. I'm just going to do this. All right, so we have those. Now let's take a look at our. First, I want to see how many we have here. 117. We've been trying to migrate this. $108. Okay, getting closer. So we definitely don't want to be. All right, and then this we want the largest. Let's do a bit of cutting here. This is going to be annoying. I really made this a pain for myself. Hopefully this still pays nicely. Oh, yeah, nice. All right. Can you tell me the DDS net option sentiment? I don't know what's going on with that.
Currently at 23 at the lows of a trend that is very volatile between also 80s and 20s.
How about 10B? What's GH?
10B, ooh, this is an interesting trend. It's popped up to the 60s after being in the low 20s for the first, 3/4 of the trend.
Now it's there.
Yeah.
Okay. And now we want to just. No, we're not going to do a whole short report. See, you guys are going to get. Sometimes you guys just get better access here. I hate when this happens. No market cap. What's going on with WLK? Yeah. Can you tell me what's going on with small cap, large cap today? I know I'm just being real. Ooh, FTX. I like FTX as a short. Oh, damn. That's like too far down. All right, we're definitely doing. We'll do TTC even though it's been down a lot. Industrials are getting crushed. Atlanta Braves holdings. All right. Oh, it has a new. Sure, we're going to do Batra.
So you want the 1-day numbers for the caps?
Mm-hmm.
So large cap growth is up 0.25%. Large cap value is down 0.6%. Small cap growth down 0.3%. Small cap value down 0.3% also.
Okay.
Looks like a large cap growth outperformance type of day.
Now let's just see if any longs look good at all. What about LRN? Okay, let's see if there's anything here we like. Now that we've really done well on the shorts. What's CCI? I feel like I've shorted that before. Yeah, I'm not doing that. Sorry, not you, Pep. Oh, look, GME. How's it doing in the signals? Maybe we take a flyer. Oh, damn, I've never seen this. It's on the downtrend. GME has a 67 upside and 70 downside.
Which of those is surprising for you, or just that they're
They're
similar?
both high. I've never seen them I've never seen two things. I've never seen high together.
I guess that's a sign of like a nuclear stock, huh?
Yeah. Okay, we definitely want Amren. Actually, we're going to exit CEG and take 2x Amren. Okay, anything else? I want to be GIS. Ooh, General Mills, are you doing well? Yeah, I wouldn't mind some General Mills. Just going to see the net options trend. Yeah. Oh no, downside higher than upside. Sorry, General. Not happening. Okay, we're done here. No time for a snappy title. All right. Done. All right. That's all, unless we have any questions.
No questions in the chat. Thank you all for tuning in at an abnormal time, but we'll be back on our normal schedule on Monday. So we'll see you all there, and best of luck in this volatile market. Goodbye for now.
All right.
Have a good day.